Good morning. It is September 13th, Friday the 13th. I want to do some back testing. Not sure what we're going to back test yet. So while I sit here and, well, let me ask you guys, like, if you would like to back test something today, do you want to back test how many times structure one versus structure two gets wiped out and returns to the other side? Do you want to back test identifying how to properly trade these 930 to 1615 in the trend model? Or like, what do you want to back test? Well, while you guys think about that, I am going to start the process. So we're above. Can somebody confirm that they can hear me? I think I'm talking. Can somebody type in the chat that my audio is working? Yep. There we go. All right. So it looks like you can hear me. Okay. So perfect. 5. Okay. So we're above. Previous month 50%. We're above, and we had a daily close. Oh no, I haven't said anything at all. And we're above. We have a daily close above NFP Friday, meaning we can expect it in the month higher, and that we are starting a bullish trend. Right. This whole last 2 months, right here, all this was noise because we were either below previous month 50% and above NFP Friday, or we were above NFP Friday and below previous month 50%. Here, these couple of days, you met one side of the criteria, but you didn't meet the other side of the criteria. Right? Remember what the whole purpose of this step is. Right? The whole purpose of this step is to identify, kind of like we use the 5-9 boxes to identify the market condition. So we know what type of risk profile we should have built, what type of trader we should be. We know that it will let us know if we're in a choppy range market. It will let us know if we are in a possible reversal. It will let us know if we're in a trend market, right? That's what the 5-9 boxes and the hourly boxes do for our intraday. This step is no different. We're just doing it at a monthly standpoint, right? So when you have periods, especially in the summertime, and the typical seasonality slowdown periods where you can see, think of these NFP Fridays as the 5-9 box, if it helps. Previous month 50%. When you're consolidating, you have to be that kind of trader, right? You have to be a range-based trader. But then when it's clear and obvious, just like the 5-9 box is on the hourly, when we have a daily close above previous month 50%, and we have a close outside of the NFP range, that's telling you it's time to go higher and to expect a possible trend start of a trend. But at the very minimum, this is last October to September. Notice how the NFPs are stacked on each other. On the month we start trending higher, right? As a typical characteristic of this. All right, so like at this point, right, we know to expect a possible trend. If this is a true trend, start of a trend on the monthly, we got plenty of months to juice out of it, right? So this month happened, we can't get below previous month 50%. We get above NFP Friday. Think about the 10 o'clock hour, even though this is the daily chart and we're looking at monthlies. Think about the 10 o'clock hour and the 10 o'clock 5-9 box. We started talking about it yesterday. Typically, the 10 o'clock 5-9 box and the 10 o'clock hour were on the high or low extreme side of the 9 o'clock of the previous hour. And we cannot dip back down to go, we can't even make it close to the previous hour mid, right? That's another characteristic. We see that this month, we can't get below the previous month 50%. NFP Friday, we go, right? When you see big gaps, we talked about this yesterday, that can't be filled, that's a sign of strength, right? I remember this so clearly because everybody was shorting the crap out of it. All right, we can't get a close on the daily below previous month 50%. NFP Friday, close above it, we expect the month to close higher. We start swiping back into the, we can't get below previous month 50%, get above NFP, but we keep swiping below into it, indicating a slowdown, right? Same thing with this month. We still are in a bullish trend. It's just we're expecting a slowdown because now we're starting to breach and test this NFP Friday range. Next month happens, can't get below previous month 50%, get above NFP Friday, but now we're swiping, and you can just see how noisy this is versus a true trend in market, right? Next month opens, it gave us 2 months worth of warnings that we're slowing down. Keep following your systems, but expect a shift at some point. This month open, we instantly, within the first week, get below previous month 50% and close on the daily. NFP Friday happens and we swipe below it and we close below it, right? So when this happens, the first thing I look for is quarterly low targets. So right now, this is a quarterly low targets, right? We come to it and then we start working our way back up. New month opens. On this day, we close above on the daily chart, previous month 50% and NFP Friday to continue the trend. To continue the trend. To continue the trend. And then what's the step, right? We are above previous month 50%, but NFP Friday is failing. And then this, which you guys all should be familiar with because you guys were all traders during this whole thing that we talked about, right? We get above NFP Friday. We get below NFP Friday, but we're not below previous month 50% until the later part of the month, right? And then we do this array where we just are stuck in between previous month 50% and NFP Friday. The moment we get below it, like right here, we're below previous month 50%, we're below NFP Friday's range, we target quarterly lows. Right here and right here, quarterly lows. And what do? We get an instant respawn from it, right? Now, we spent this whole month stuck between previous month 50% and NFP Friday. NFP stacked on each other, just like we saw at the end of last summer before we started this hell of trend, right? But now, we're above previous month 50% and NFP Friday. So now, for me, this is the start of a trend, and my job is to find, for the people listening to this space, if you're a guy who trades equities, now we need to start paying attention to the regiments of what the sub-industry groups and the industry groups are. It's probably going to be leaning, well, I know it is, it's leaning more tech-heavy this week and growth-heavy. If you're, I would say keep the economic regimen out of it because that's lagging right now. But yeah, you should be adding exposure. You should be harvesting risk premium. you should be looking for the low of the day between 5 and 11. You should be ultimately expecting to close higher by 16:15. So it should make days like yesterday, which was super frustrating for you guys, some people. I'm not gonna say you guys, easier, which we'll go through because we're in a bullish trend. These are the type of markets like you guys have heard about, right? Where if you just throw money at it, you make money. It doesn't matter what you go long in, right? That is this kind of market. That is this kind of market. Actually, I started right here, right? And if I marked out all these, which I did before I just erased, like you would see it. So I encourage you guys all to go through this step. And yeah, it's tedious. It's tedious having to draw out every NFP Friday and find what day was the NFP Friday, and then have to draw ranges, but it will clarify your trading better than anything I've ever done from the higher time frame. All right. So now we go to the weekly chart. It's the third week of the trading month, or the second week of the trading month. Yeah, second week of the trading month. First week we got overextended between the 2.5 and 5% from the 5 EMA. Remember, we aren't using that 5 EMA like typical people do. That's just a constant variable, right? That would be like the standard deviation. This is the standard or this is the mean, and we're measuring how far a price gets extended on the weekly chart away from it, right? Because we know whatever it's pricing in that makes it go this extreme between the 2.5 and the 5, right? We get slowdown periods where it's going to slow down, let everything catch up, and then continue trend or do a reversal, right? So knowing that, let's look at some examples of that, right? October 30th, first trading week of the month, second trading week of the month, third trading week of the month. At this point, we're at 3 point. Actually, we get higher than that. We get all the way up to 4% or 3.5% right here. What do? We slow down for the fourth trading week of the month and the first trading week of the month. Why is this all jacked up? All my NFPs all shit. We return to that 5 EMA. We slow down. We get overpriced. We slow down the first and second trading, the fourth and first trading week of the month. We return to it and then we continue. Maybe it's because I have this B adjust on. Yeah, that's what it was. Right? So new month, right? We get above the NFP Friday. This is the first trading week of the month, second trading week of the month, third trading week of the month. We get overextended from that 5 EMA, 3.5%. What do? Fourth trading week of the month, we slow down. First trading week of the month, we return. Right? Now, first trading week of the month, second trading week of the month, third trading week of the month, fourth trading week of the month, or 22 January, whatever that is. Right, at this point, with 3.69% away, what do? We slow down and return to it. And then we start going into the slowdown period where stuff isn't as clean, right? And even on these kind of days, right? Fourth trading week of the month, first trading week of the month, second trading week of the month, third trading week of the month, 4.92. Last trading week of the month, we reverse, slow down, and then continue. Right? Oh, I'm just going through all this because I know that a lot of you guys are visuals and you need examples to really grasp the concept. So, and the reason these days are not on the actual first of the month is because during this time there's a T+2 clearance and settlement cycle for life cycle of a trade order. So literally trades placed 2 days ago were just getting cleared today, and just like the trades getting traded today from the executing broker are going through the clearing and prime broker and collateral margin team for the next 2 days. So the beginning of the month was 2 days before the actual first trading day of the month because they had to go through the life cycle of a trade. Okay, so now first, second, third, we get overextended, 3%. Fourth trading week of the month, we slow down. First, we continue, right? And one thing I would challenge you guys to do, listen to Bloomberg. Whenever we get to 2.5 to 5% overextended on this, or it's the third or fourth trading week of the month, listen to Bloomberg. Listen to CNBC. Listen to the news sources, right? It will make you go crazy because it's so predictable what their I think what's the word I'm looking for? Their sentiment, maybe. The sentiment just completely shifts. I love listening to Bloomberg. It's my favorite thing. It has nothing to do with my trading, but even I've noticed this. Maybe I'm a conspiracy theorist. I don't know. Maybe it's a tin hat theory, but like I do notice, like I notice things, right? I pay attention. For the love of God, I did reconnaissance in the Army. My job is to pay attention to detail, right? Like, like I notice these things. If you listen to Bloomberg all month long, every single day, you can see the sentiment. You can hear the sentiment in their interviews. You can hear the sentiment in their voice, what they report. And usually, once we get to this point, right, where we're 5% overextended, their sentiment starts shifting to a more doom and gloom kind of sentiment. Is wild, right? All right. So we know that we're not overextended at this point. Going into the third trading week of the month, bullish trend. We know we are looking for 3% to 5% max, right, for the end of this month. All right. So did this part and did the explanation of NFP Friday and previous month 50% help you? Are there any questions? If you have any questions, put them in the chat, please. All right. So now that leads us to, based off of those two steps, we have a good indication on, are we looking for the low of the day or the high of the day? If you're stuck in between the two ranges in FP Friday and previous month 50%, you're looking for both sides of the day. Usually it would be determined based off of the formation of Asia and London. You can have a good understanding of what you're looking for. All right, but now that we have clear direction, we're looking for the low of the day. All right, so now if we know that we're looking for the low of the day because of the relationship of where we are within previous month 50% and NFP Friday, you might as well look for the low of the week too, right? Especially if you're later in the session, right? Or if it's obvious. So ICT community uses this Sunday. DR community uses this Tuesday, right? DR community looks at their weekly profile from Tuesday to Tuesday. ICT does Sunday to Sunday, right? I put both of them on my chart, right? Because it makes it obvious, right? This week, the low of the week for the ICT community was put in on Sunday night at the open, never returned to. Is that a sign of strength or weakness? That we can't even make it back to the opening price for the week? Where can I find that measuring tool with the arrow you're using? Oh yeah, like so if you go on your trading view chart right here, like and you click on the one that has long position, short position, forecast, bar patterns, ghost feed. What the fuck is a ghost feed? Oh my goodness. Holy shit. What is this tool? Damn it, Andy, you got me distracted. I don't know what this tool is, but it's better than the price tool. Dude, I never knew a market could do this. What the fuck? What is this? What do you mean strength? All I know is I can draw Christmas lights on my chart. Okay, now I have to undo it all. Damn it. All right. Yeah, so you go over here and it's like right here under the measures. You can do dates, you can do date and range. So like does this one will tell you both. All right. So this is definitely a sign of strength, super strength. Exactly, right? When we can't even return to the new week open, that's telling us something. So all this nonsense that you saw yesterday was just confusing. We discussed it in yesterday's video. So we know that the clearest one to go off of is the Tuesday, right? And a lot of the old school ICT traders, you know, who most of them are off the grid, right? Because they don't like dealing with social media or that nonsense, or they're dealing with the drama. Like they use this Tuesday to build projections off of it as well, right? But you can see that for the DR community, so for the ICT community, the low of the week was Sunday. For the DR community who uses Tuesday to Tuesday, right, the low of the week was Wednesday, right? And then they expect up until next Tuesday to be above this Tuesday, right? All right. So we know that based off of where we were, NFP and previous month 50%, and where we are within the weekly extension, that we can be looking for the low of the week, right? These daily profiles should low of the week, low of the day between 5 and 11 o'clock, right? Right? Because we have the indication in our brains. I'm such a stupid speaker at 5 o'clock in the morning. We we think we know that we have high probability to close in the day higher, right? So unless London does this obvious, right, obvious low of the day, right, we can expect it during the New York, usually during the 9:30 and 10:30, right? Because we're expecting the close of the day to go higher, right? So that's where this step is, right? Does any of this look like an obvious low of the day? No, not at all. Like nothing looks like an obvious low of the day yet. So that's a discretionary 101, right? But like when you've done this long enough, like you can use that discretion to your advantage, right? Low of the days and high of the days are obvious, obvious, obvious. They're just obvious, right? This doesn't look like anything yet. All right, moving on. We move, let's say 17%, 16.6. I looked at it beforehand. I'm not that good. All right. So now let's look at yesterday real quick. I've already deleted the drawings or our projections, right? Right. Was this complex? Yes, this was hard for a lot of traders, to include myself. I was trading it with one of my best friends yesterday, and he lives right down the road from me, and like he's doesn't communicate on social media, but he is one of the best traders I've ever seen in my life, and he's working with me and coaching me through how to like sling size is what the cool kids call it, but trade higher size, right? Because like my skill set is up here, but my portfolio is down here, and I'm trying to compound myself up to here so I can trade proper size, right? Because my personal portfolio has a lot of cash sitting in it that I wasn't comfortable with selling risk premium or going into the equity space. So like a lot of it is at risk for being stagnant and at risk because I have a lot of exposure in the bond market right now that I'm looking to shed off. But for my intraday part of the portfolio, even that isn't being traded to its full potential, right? Because the size account and like we did the math, like based off of the amount in my intraday account, right, and how much I'm trading, which is between 3 and 6 micros, right? Like 3 to 6 micros. It means I'm risking 0.25% of my account every single trade I take. I'm only risking 0.25% of my account. And so, like, why am I only, I'm not intentionally doing that. It's a psychological issue that I have, right? Like, I do not feel comfortable trading intraday, the noisiest part of the day, with minis, right? So now I'm at this point in my trading career where my potential is up here, but my risk is down here. I'm gonna do a video on that indicator, Future Millionaire. You're talking about the vet. So like, yeah, he was helping me yesterday, and I was like, even yesterday, like, where was it? It was right here, 9:45, 9:30. So like right up in here on the 1 minute, like I got long, right? But it was only 3 micros, right? And I wrote it, yeah, and it was worth great money. But I was even telling him yesterday, like, this isn't obvious to me, even though like I have a high indication that this is going to be the low of the day. We came down and knocked out structure 1, and now I expect us to come up to structure 2 and hit the higher projections and close higher, right? Like, it was still hard to pull the trigger over 3 micros. I mean, not even 3 minis. Like, I should have been slinging minis yesterday, but I didn't, right? And I yelled at Jonathan yesterday because he said he reduced, I didn't yell at him, but he reduced position size because he's been winning too much and he's just waiting for the loss. So him and I are dealing with the same issue when it comes to adjusting our risk profile, right? But anyway, okay, so before we go into the projections, right? One thing that we know is that from 1800 to 06, these guys, highs and lows, have high probabilities of being returned to, right? We have the data for it, and the data supports that highs and lows will be returned to, right? So, with that being said, I gave you the option positioner. Dude, it was pull the trigger trade. Are you talking about for crude oil? I do have exposure in crude oil now. Yeah, I definitely got exposure in crude oil. I'm positioned like right around this area right here for a long-term swing. Wait, that's not crude oil. That's some toothpaste company. I was positioned yesterday somewhere like in this nonsense, but I'm going for a longer-term target. I'm not intraday trading it. Anyway, because I'm rambling now, I'm getting sidetracked. No, it was an NQ reversal. I believe it. Like, I don't know what you're referring to, but yeah, dude. Did you text me throughout the day? Oh, yeah. The spy positioning. Yes, 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 yes. That was amazing. I need to dig deeper into that. All right, but anyway, so if we know that the 1800 to 06, both sides have a high probability of being returned to, or at least the 15-minute candles within them, right? Each one of these 15 minutes, as we take out one side, we know that the probability of returning to the other side are extremely heightened for this period of 15-minute candles. We know that from 9:45 to the rest of the day, the probabilities drop dramatically of if we take out this 15-minute high of returning to the low. Each 15-minute high and low has a probability of being returned to, right? I'll do that later, Jerry. So if we know that all these 15 minutes between 18 and 06 have high probabilities of being returned to, and we know that from 9:45 they have lower probabilities of being returned to than our job. And then we also, which we started talking about last week, we know that the RTH trading hours has two similar patterns, right? If we break it down to its simplest form, right, there's two simple patterns. There's V-shape, and I call it V-shape and puke. V-shape, 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 trend. V-shape, V-shape. I probably should name it something different than V-shape because, like, you guys are going to get confused. You're going to expect, like, specific V-shapes. Trend. V-shape, V-shape, inverse V, trend, 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 inverse V, trend, inverse V, inverse V, trend, 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 inverse V, trend, inverse V, clusterfuck. That's what we're going to call it. Trend, trend, trend with the inverse in the afternoon, trend with the inverse in the afternoon. So if we know that that is the case, so now we've talked about a lot of stuff, and I feel like I'm going to start losing the attention span of you, which is fine because you're going to eventually see it, right? And we know that we have this separated. One portion of our day has high probabilities of being returned, and that's from the 18 to 06. And then we know that we have two formations that the New York's going to give us, a V shape or a trend, right? Now we can anchor our trading, and like I told you guys, the 15-minute or the 30 is like, and like if you use the 5-9 boxes, you should be tracking. Oh my God, that's exhausting, right? Knowing what you know about this, let's go back to yesterday. Let me erase some of this. Knowing what we know, right? That this round box is at 1800 to 06. It has a high probability of reversal, right? Or taking out the other side after breaking out one side. It has a high probability of returning to it, right? And then we are tracking, and then we were tracking yesterday that there was a low of the day formation happening, right? We were expecting the low of the day between 5 o'clock and 11 o'clock, right? So our job is to be on the 5-9 box, paying attention to the reversal area. If you remember right here, this was that probability that had 76% chance to the downside, right? We reached it, and then we should be looking for a reversal, right? When we hit this, and we started a new hour, we start the 5-9 box. No body closures could go below this. And I'm not saying a body closure has to stay above it, but that was the first thing I noticed. I might have to turn this off because it keeps flickering and it's annoying. All right, there we go. So the 5-9 box develops, and then minute 9 develops, and we start heading out, right? During this, you already know that you're looking for the low of the day around this area, right? We've already opened up this hour above the previous hour mid. Now we're above the 5-9 box. We come up, we swipe. If we come up, we swipe. It's okay. Remember, we talked about if you have 10 micros, right, your job is to expose them throughout the 8 hours. Right now, this is showing crap of consolidation. This is a ranging market. The trend didn't start somewhat looking clearer until this hour, and then this hour told us that we were not in a trending market. We were still in a ranging market. This hour, we were still in a trending market, right? This is all a range. So our mindset should have been, if we met the lower probability and we're expecting the higher probabilities to get formed and we're expecting to close the day higher, right? But we're in a ranging market, we should be buying low and selling low-hanging fruit. Buying low, selling low-hanging fruit. Buying low and selling low-hanging fruit, right? We know, based off the market dynamics, that yes, this trend will eventually break out. And this is the power of watching this live and not just listening to me give you education about it. You have to be able to look at these 5-9 boxes, synchronize it with your high probability statistics, and you have to be able to watch it, right? So right here, the 5-9, we know that we're in a ranging market, and that our job is to expect to close the higher for the day, for us to buy around the hourly 5-9 box and target low-hanging fruit, right? Previous hour mid or previous hour highs, right? So when this thing came down, like we stepped above, remember I said we're stepping above and finding footing on the high, mid, low of the 5-9 box. And if you want to get real fancy with it, you can download this strip grid contraction or 30-second grid contraction by 2 degrees, which is free, and set this on the minute 9. I love having that on, right? But you can see that we're testing even the high, the low, and the mid of that. You had plenty of opportunity to start a position here, right? Your first target is we have to get above previous hour midpoint, and then some kind of continuation, right? Remember, if you're trying to start a position though, because you're expecting us to break out of this range-based market and start trending to the upside, because at this point, we had only filled 40% of the average daily range, average 10-day range. There was still 60% of the range for the daily to be had, right? So it would have been perfectly fine to start a position in these 3 hours with a fourth of your contract with the expectations to close higher. And yeah, guess what? It went your way to come back. It went your way to come back. It went your way to come back. That's part of trading. Doesn't mean this is the time when it keeps coming back and finding support off of a 5-9. This is when you have to ask yourself, has the market conditions changed whatsoever? Or is it just being frustrating? There's no reason to get out of your positions here. And trust me, I'm guilty of it too. Anyway, this hour opens up, and what do we get? We get a sign of strength. We instantly take out the previous hour's highs, right? And then the 5-9 box shows us it is unwilling to come back into this hour's range. We step above, we find support, we ultimately close higher, and then we put in the close price and we exhaust everybody who caught this run up during this hour. We wiped them out, right? But that's what you're trying to do, right? This is what the same concept we're trying to do on the daily chart. It's the same concept that we're trying to do on the hourly chart. It's the same concept that we're trying to do when we're thinking about this New York. Is it going to be a V shape or is it going to be a trend day, right? With a 15-minute, right? That's our job. That's what we're trying to do. And then we're trying to place mechanical trades around that with proper risk. All right. Any questions so far? Is this making sense? All right. So now, market clues, right? We know that our higher time frame has us above previous month 50% in NFP Friday, and we've already taken out previous day's highs in Globex, we know that we have a high likelihood of returning to this high in the RTH because we did it in Globex, right? Sign of strength. Can we get back down to previous day's midpoint? We'll see. Is anything obvious yet? The only thing that's obvious is that we've taken out previous day's highs and that momentum still has the possibility of shifting up, right? When we think about the weekly range, right, since it's Friday, we can see that we have met the criteria of our average weekly range, which is 1089. We've done 1102. So that is that. All right, so now we're going to start our steps. Right, first step. Somebody put in the comments, what's the next step? What's the first step that we do for putting the highest probability on our trade? Highest probability trade on our chart for the day. I'll give you a hint. It has to do with probabilities. We have three types of probabilities. Which one are we doing? Time-based probabilities, not time structure. That's not even a thing, Matt. We're going to put our time-based probabilities on the charts, right? What time-based probabilities are we putting on our charts? There's three specific ones that we do. What three time probabilities are we putting on our charts? What times? $1800, midnight, and settlement, 1615. There you go. All right, so finding that, this is settlement, or this is 1800 right here. Also known as Globex Open. Now we're going to do midnight. Good job, Amy. Dang, settlement and weird. Settlement and Globex is the exact same spot. I'm not going to put the actual price level yet on that anymore because that means I have to change it and I keep forgetting to change it. So we're just not going to put it on there. All right. So now we have to put our structure-based probabilities on here. Not 4 a.m., There's no foreign. So I think Clifton, which you're referring to, so these are time-based probabilities right here. Midnight Globex open, which is 1800, and settlement, which is 1615 or 415 from the previous day, all Eastern time. Right. So now we're going to go into our structure-based probabilities. And we know, we've talked about it already, that we're going to find between 1800 and 06, we're going to find the highest high and the lowest low. And we're going to find the probability of that highest high and lowest low, and we're going to call that our structure-based probability. Because we know that these, remember we talked about the 1800 to 06 has the highest reversal data of the day. So on the 15-minute chart, if one side of the 15-minute gets taken out, we return to the other side with high probability, right? We're going to call this structure 1 to the upside, and this is at 18,489, coming off of the 0130 price, 0130, that has a 86% probability of being returned to. And then we're going to put structure 2 in at the low, that 19,412, coming off the open, has an 82% probability. This should be 19,489. All right. However, one thing that we have to look at, which is going to be the next in the test, how big this 18 to 06 will determine if we come down here, right? We're not going to go into that yet. All right, so now let me ask you this, right? If we can't make it down to structure 2 for the rest of the day, let's say we just start going, right? And this low of the day is 1800. What is that telling you? Should you continue to spend the day short in the markets? No, you shouldn't. You should be tracking the trend off these hourly charts and their 5-9 boxes. So and it'll be obvious, right? Most things that are dominant in the market are obvious. You just aren't looking at it the correct way. Or we are not looking at it the correct way. All right, so now we have to do our projection-based probabilities. Our projection-based probabilities are based off of, turn this off, turn this off, turn this off, turn that off, right? Our projection-based probabilities, if you're an ICT-based trader, you're gonna use your little kill zones. If you're a DR-based trader, you're gonna base it off of your DR, ADR, and ODR. If you're an auction theory trader, you should be basing it off of your Globex value area high, value area low, and point of control. But however, right, these Asia model and these Londons, right? So this is from 1930 to 02. This is from 03 to 04, right? Have structure to them, right? For this structure, we went short, and then we broke the other side of the range, all by 2 o'clock. For this London, from 03 to 04, we engulfed both sides of Asia. Guess what? They have probabilities to them. And so when we build our probability, our projection-based probabilities, it'll be based off of what did Asia do, what did London do, what are the variables that they've already displayed, which will give us the probabilities of what 9:30 to 10:30 will look like, what the highest probability of that is, and what the highest probability of the 10:30 to 16:15 is going to be, right? And I'm currently in works with 2 degrees on building an indicator, so you don't need all these crazy databases and these crazy technology systems. It'll be on your chart, able for you to do. You don't need to be able to have to look back 4,200 days to get this. All right, so we're going to incorporate that into our system now. So we see that, all right, so we see that from 1930 to 2030, Asia went short and then had a false day. So out of 4,280 days, and then that London has went short and possibly having a false day to the upside. So with those variables in play, right, out of 4,280 days, what Asia did, even though Asia only have moved 17% of the average daily range, what it has done has only happened 13 other times out of 4,280 days. So let's look at some of these days that this happened in. All right. So now we're going to go to NQM 2022, and we're going to go to the date of April the 22nd. And I usually do this because this is called prep drills. Like I like to do prep drills. So in April 22nd, right, what did New York do? This is the same variables that has happened in Asia and London happened on this day in April 22nd, 2022. We took out structure 1 and we returned to structure 2 with a V shape with a trend day. Now we're going to go to the next one. NQM 2024. And then we're going to go to April the 9th. Same thing, right? This Asia variable went short to go false. London went short to go false. And what did we do? We took out one side to retreat to the other side of structure 1 and structure 2, our structure-based probabilities, right? And we ended the day higher. Wow, that would have been accounts got blown on this day. All right, now we're going to check out one more. NQM March 19th. So a lot of these actually happened this year. Right? We went lower to have a V-shaped day during the RTH, right? All right, so now we're going to put our projection-based probabilities on. So far, we put our structure-based probabilities on. Now we're going to put our projection-based probabilities on, right? So now this one's already been met, so we're not going to put it on. This one's already been met, we're not going to put it on. $19,506 has a 92% probability. Based off of what Asia and London has done, this has a 92% probability of being hit today. Oh shoot, I gotta change the color. I'm gonna get thrown off. Blue. 19,548 has a 77%. And this is the only part that you guys don't have access to yet, but actually you will when the vet comes out, you'll be able to do the same thing. It just won't be able to give you the probabilities based off of what Asia and London has done. 19,598. as a 54. All right, so now, based off what Asia and London did, actually, let me put the downside targets in. Actually, this is the first one, 2.5. So 19,408 has a 62%. $19,366 has a 54%. And then previous day midpoint, where'd it go? Which is 19,317 has a 38%. Need to fix this. So now we have to put our distributions and where our 930 probability is going to be. Believe it or not, the highest probable 930 to 1030 is going to be upside. 31%, 23%, so 54% is going to be above London's low. So if we put the 3 to 4 o'clock, it's saying that there's a 51% probability that during 930 to 1030 that we do not breach this area right here, right? There is a 15% probability that will engulf it, this 3 to 4 range during London. There is 23 plus 8, so 31%. Let me write this down so I don't miss it. Above London low, we said that was a 31 plus 23, 54. We said engulf London was 15%, and we said below London 23 plus 8, so 31%, right? So now this is the point where we're gonna, our average 930 to 1030 range is 180. Jeez, I forgot we haven't moved all that much. Right there. All right. So if this is our 930 to 1030 range and we have a 54%, a 31%, and a 15% of what New York can do, right? Now we're going to sync the probabilities with this, right? If we look right here, we have Globex open, 70%, settlement, 66%, structure stat 2, 82%, and then projection base 1, 62%, right? It's pretty reasonable to say that during 930 to 1030, right, the most volatile time of the day, to expect a fake move or whatever you guys want to call it. I just call it a move right here. So nine 30, 10:30. To look something like this. But in order for this to happen, right, we need to get below the midnight price? Well, we know that the higher we go between now and 9:30, the better, because this midnight price has a 75% probability that will pull price back into here during 9:30 to 10:30. So now we're going to do our daily distributions, right? So if we know that our average 10-day range is 452, we'll draw that out. Damn, we have not moved at all today. And if we've already maxed out our weekly range, what's the likelihood? Because the average weekly range is 1,089. We've already moved 1,100. So what's the probabilities of us putting another 400 handles on our weekly range? Who knows? Average 10-day range, 452. And then we know that the 4 o'clock to 8 o'clock on a Friday moves typically 0.41%. From 8 to 12 on a Friday, we move 1.16 out of the last 44 Fridays. And then from 4 to 8, or sorry, 12 to 16, we typically move 0.76. And look at that, we finally got a day that actually lines up properly. Right, so we know that this is our average 10-day range, which is 452. This is our average 12 o'clock to 16 over the last 44 Fridays. This is 8 to 12, 1.16, and this is 4 to 8, 0.41%. First one we can place is the 4 to 8 because we probably already in that time period. For low right there. All right, and that goes to 8 o'clock right there. Now we're going to put the 8 to 12 o'clock distribution, right? And this is the one that's going to be sketchy. We'll just anchor it from this 54 to this 54. And then now, based off of this 9:30 to 10:30 midpoint, because remember, the farther out you predict, the less accurate you're going to be, right? So if for us to try to predict the 12 to 1600, or not predict, but like find the stats tell us that there's a 54% chance from 1030 to 1600 we go long, and that there's a 38% chance that we go short, right? But what's the point? This is interesting. So the one thing that, like, I'm noticing, oh no, that's down here. Okay, so right now the market hasn't shown its hand, so we're not going to sit here and try to put false data on our charts, right? Right now, there's a discrepancy with me wanting to admit that we're maxed out on our average weekly range, and me thinking that we're going to put 452 handles onto our average weekly range, which is over 25% of our average weekly range. It's just insanity. So what I will do is I will sit on my hands, I won't trade, or I'll wait for the obvious, and the obvious will happen on the 9:30 to 10:30 for me to I'm just gonna mechanically trade today. Like, there's no sense saying anything outside of that. Like, I'll trade distro trades. I'll trade the midnight retracement if it even gets juicy enough. But today, I will just trade my mechanical systems, captain back test or distro trades, right? Because right here, all the probabilities are pointing to an upside move, right? However, like, I'm not comfortable putting 452 more handles on the weekly range when we're already maxed out. So what is that telling me? Like, I don't care, right? Like, I've already made plenty of money this week, and I'm just going to trade purely mechanical. All right, let's see what the chat is saying. These are probabilities. While they are both closely related, they are not the same. Probability equals likelihood. Stats equal inference. While new to his channel, these are tools to sharpen an edge. Absolutely, Taco. Thank you. I see. All I want to know is where your effing stops are, man. Yeah, like he won't tell you his stops. Captain, don't negotiate. That's an average. Is made of values above and below. So yes, we can expect that some of the weekly. Yeah, absolutely. I definitely expect that, and exactly what you said on the Z-score comment. However, like for me, unless it's obvious, like there's no sense me risking capital. And I'm not one of these dudes that say concept conserve your capital Friday. Fuck that. Like if your edge sets up, like you trade the shit out of it, right? But from this standpoint, from a standpoint, like I'm not seeing anything too awesome yet. The only edge I see is not even midnight, right? Because we're slap dab in the middle. I know that from 1800 to 06, we're going to wipe out one side of the structure, and there's a high probability to the other side of the structure. From a directional standpoint, the other probability that I see, we've taken out previous day's highs. I expect if we decide to drop from now to 9:30, and even 9:30 to 10:30, like for us to return to this high. The other probability that I'm highly confident in is that we close higher for the week, that the week close off on a strong weekly candle, right? Which means we haven't taken out highs or lows. This is an inside week. Oh man, cool. Buy the dip, ride it up to the previous week's highs. I'm just kidding about that. But this is the highest probable trade right here. Right here. With this, what you're looking at right here. Right? Saying that when you have a cluster of stats like this in this area where we have Globex open 70% settlement, 66% structure set 2, 82% projection base, 19408, 62%. That's why I'm going to anchor my 930 to 1030, saying that we are going to engulf the London, which only has a 15% based off what Asia and London has done. However, if we come and meet this criteria before 9:30, then my mindset shifts to this right here. Actually, that is the probability that it's pointing to. So 31, 28. That might make more sense, right? So for us, between now and 9:30, for us to come meet the statistic drive of here, and then 9:30 to 10:30 will be above London. Actually, it's above London's low, so this low right here. And then the rest of the day, from a statistical standpoint, looks like this. But I'm just gonna trade my mechanical systems because my mechanical systems are designed to capture this distribution right here and this parts of this distribution right here. So it's a good day for me, not to discretionary trade, but just to trade my mechanical systems. Where's previous week's highs? So right here. Yeah, so that's a realistic view. Like it's not It's not outside of the realm of possibilities to say that we don't take out previous week's highs, which are right here within today's range. Cool. All right. So hopefully this was helpful. Remember, this part of the day, we're just puzzle piecing the highest probable trade. And who cares about anything else, right? Like, I'm not going to sit here and entertain trades on like this time of day. Actually, I would entertain a trade. I would entertain the 6 o'clock trade, but I'm usually on here talking to you guys doing these levels, and I don't take it. Any questions about how we did this, what we did, what the probabilities are, any of that? Friday has a 41% of being the how. What is the how? I have his indicator. What is the how, Jerry? DM me that because I do have to jump. I have to go into the office today, so I have to get ready for work and get my daughter up for school and all that.